statement of an entity, where those financial statements include financial information of one or more components audited by another auditor. In here, the component means that the divisions, branch, subsidiary, joint venture, associate company, and other entity whose financial information included in the financial statement audited by the principal auditor. While the another auditor is defined as an auditor other than the principal auditor with responsibility for reporting on the financial information of a component which included in the financial audited by principal auditors. It is other auditor include affiliated firm and unrelated auditors. Next, we'll proceed on the planning and administrations of the group audit. It is defined as the planning include establishing the overall audit strategy for engagement and developing an audit plan, which includes the background of the company, which consists of the company profile, education justification, mission and objective, product and services, and the last one is the contact information. The second one is the location, third one is language, fourth is the culture, the last one is the standard that are using, which is MPERS or MFRS. Next is the specific issues in the group audit. The consideration before accept the appointment of the principal audit consists of 5. The first one is materiality of the portions of the financial statement which principal audit. The second one is the principal audit knowledge of the business of the component. The third one is the risk of material misstatement in the financial statement of the component which is audited by the other auditors. The fourth one is the extent of the additional audit procedures by principal audit. And the last one is the competence of other auditors also need to be considered. Next, we will discuss on the scope of work of the principal auditor. The first one is the scope of work of other auditors. Second is the any problem encountered in the past. Third is the significant changes. Fourth is the materiality of the component compared the group as a whole. The last one is the inherent risk assessment of the subsidiary by the principal's auditor. Next, we'll proceed on the procedures of the principal's auditor. There are 4 procedures. The first one is the preliminary stage, which is the obtain and prepare schedules of the investment in the subsidiary. The second one is the detailed audit work, which is the checking the consolidation figure. The third one is the questionnaires, which is collect the confirmation from the other auditors. And the last one is the review other auditors' working paper, which is to ensure the audit carried out are according to the standards and the requirements.
Auditor responsibility. The requirements in the ISA are designed to assist the auditor to identify material misstatement due to non-compliance with law and regulation. However, the auditor is not responsible for preventing non-compliance. The auditor is responsible to obtain reasonable assurance that financial statements are free from misstatement due to fraud and error. Under ISA, auditor responsibility distinguished in 2 different categories, which is direct effect on the determination of material amount and disclosure in the financial statement, and indirect effect on the determination of the amount and disclosure in the financial statement. Next is auditor objective. It is to perform specified audit procedure to help identify instances of non-compliance with other law and regulation that may have a material effect on the financial statement. Second objective is to respond appropriately to non-compliance or suspected non-compliance with the law and regulation identified during the audit, and to obtain sufficient appropriate audit evidence regarding the law and regulation. Impact on the financial statement. The provision of law and regulation may either have direct or indirect effect on the financial statement. Non-compliance with law and regulation may result in fines, penalties, and litigations. Auditor's consideration for compliance with relevant law and regulation. As part of obtain a general understanding, it shall be legal and regulatory framework and entity compliance with the relevant framework. The auditor shall obtain sufficient appropriate audit evidence regarding compliance with the provision of law and regulations. Auditor shall perform the following audit procedure to have identified instances of non-compliance. During the audit, the auditor shall remain alert to the possibility and maintain professional skepticism. The auditor shall request management to provide written representation that all known instances of non-compliance or suspected non-compliance. Auditor procedure to be performed when non-compliances identified or suspended. An understanding of the nature of the act and the circumstances in which it has occurred. Second, if the auditor suspected there may be non-compliant, he or she shall discuss with the matter with the manager. If the sufficient information about suspected non-compliance or cannot be obtained, the auditor shall evaluate the effect on the lack of sufficient appropriate on audit evidence on the audit opinions. And auditor also should further information to evaluate the possible effect on the financial statement. Related party transaction. First, how? Identify related party. Second, when? During the planning phase. Why? Because the transaction, transfer of resources, services or obligations between related parties may not be at fair value, either higher or lower than the market price or no price. Types of related party. Party that control or are controlled by the reporting entity. Party that exercise significant influence, substantial shareholder of the reporting entity, key management personnel and their close family member.
The other specific issue in group audit is goodwill on consolidation. Issue regarding goodwill on consolidation is computation of goodwill, treatment, and impairment review. The computation of goodwill must be done either the result is higher of goodwill or bargain purchase in acquisition of a new subsidiary. Next, for treatments in its impairment review. Goodwill recorded where the fair value of consideration transfer plus any of the fair value of non-controlling interest in the acquired exceed the fair value of net asset acquired. While if the net fair value is higher, a gain from bargain purchase is recorded on the consolidated income statement in accounting period that the acquisition takes place. The auditor must review this new acquisition and review the treatment of the goodwill has been done. Next, for impairment review, the amortization of goodwill is no longer allowed. Goodwill recorded in consolidation is subject to an annual impairment test. This is one of the process gathering evidence appropriate to the specific consolidation adjustment made necessary by financial reporting standard. Let's move on to the final issue in group audit, which is letter of support. Letter of support is letter sent by parent company to the subsidiary who have difficulty in going concern, and the state of intention to support the subsidiary interim financial by accept the letter as evidence. The auditor need to consider the ability of the parent to help the resource available.
Audit report for subsidiaries. The auditor of holding company is fully responsible for the audit report on consolidated financial statement, which they require to determine whether the report of subsidiaries are modified or modify. If modify, determine the nature and significance of the circumstances that lead to departure from a modified report in relation to overall consolidated financial statement. For example, if it is immaterial, no reference is made in report of auditor, while if it is material, the reference is made in the report of auditor. Companies Act 2016 Section 266 Powers and Duties of Auditor. Auditor shall report to members on the financial statement and accounting of company. Auditor also required to express an opinion on the group financial statement as a whole. For example, give true and fair view opinion. Other than that, for all subsidiaries company audited by the auditor of the holding company, they require to satisfy the financial statement of the subsidiary are informed and content appropriate and proper for consolidation, and also receive satisfactory information and explanation as required for consolidation. Next, auditor has right to access at any time for accounting and other records for purpose of audit of the company. Report of auditor must be attached on the financial statement or consolidated financial statement, read before general meeting and be inspected by member, and etc.
Next, let us look into the topic of using the work of others. The auditor can using the work of others to obtain the evidence. It consists of work of others auditors, work of expert, and work of internal control.
First, let us look into the work of other auditors.
Under ISA 600, when the principal auditor uses the work of another auditor, the principal auditor should determine how work of others auditor will affect the audit. The principal competence of other will be taken into considerations of the others. It is not a charge of accountant. Principal auditor also responsible to inform the other about crucial matters such as the area requiring special consideration, procedure for identification of intercomponent transaction, and significant accounting, auditing, and reporting requirement. Principal auditor also should consider significant finding of other auditor. That means there must be proper between the two others to maintain the quality of work result. It is also required the all material area in the financial statement of the subsidiary need to be confirmed by the principal auditor as acceptable. However, any work that entrusted to the other auditor will not be the responsible of principal auditor. Once reliability of the work carried out by the other auditor is in question, the principal auditor should perform a detailed review of the other auditor working paper and give attention on existence of proper documentation of audit work carried out by the other auditor, adequacy of the audit program, scope of work covered by the other auditor, whether appropriate tests of control and substantive procedure have been performed, whether adequate audit evidence are obtained, whether work carried out by engagement team are being adequate reviewed. If the principal auditor is not satisfied with the working paper, the principal auditor might request the other auditor to perform the supplementary test, or alternatively, the principal auditor might need to perform the test. Next, let us look into using the work of an expert. In ISA 620, expert means a person possesses special skill, knowledge, and experience in a particular field other than accounting and auditing. An expert may be engaged by the entity, engaged by the auditor, employed by the entity, and employed by the auditor. But when determining the need to use the work of an expert, auditor will consider the materiality of the financial statement item being considered, for example, the materiality of underground mineral, the risk of misstatement based on the nature and complexity of the matter being considered, and the quantity and quality of other audit evidence available. auditor need to consider the matter of objective, scope of work and nature, role and responsibility, nature, timing, and extent of communication involved, and need auditor expert to observe the confidentiality requirement. If an expert does not provide sufficient audit evidence, the auditor still have to resolve the matter. First, to resolve, the auditor may discuss again with management and the expert. Then, applying additional procedure including engaging another expert if required. But if still unresolved, the auditor may modify the audit report. Unqualified opinion with emphasis of matter is uncommon and the auditor is unable to make comparison on the result reported by the expert. Or, auditor may issue a qualified report due to lack of audit evidence or disagreement. So, for the last one is work of internal control. Under ISA 610, internal auditing is an appraisal activity established within an entity as a service to entity. Its function include, among other things, examination, evaluating and monitor the adequacy and effectiveness of the accounting and internal control system. The external auditor should determine adequacy of work performed by internal auditor before using their work. As a shortcut in performing audit procedure for the purposes of expressing opinion, an external auditor may review the work of an internal auditor. Internal auditor will be able to advise the external auditor on important issue so that the external auditor can be more focused on their job. During the planning stage, the external auditor should first of all understand the internal auditor scope of work, function, and objective. If it is different to the external auditor should not rely on the work of the internal auditor. During the planning stage, the external auditor should first of all understand the external auditor's scope of work, function, and objective. If it is different to the external auditor should not rely on the work of the internal auditor. The external auditor preliminary assessment of the internal auditor function will influence the external auditor's judgment about the nature, timing, and extent of the external audit procedure. Therefore, the external auditor, in order to accept the work of internal auditor, should evaluate the internal auditor in terms of technical competence, the skills and expertise of the internal auditor, professional due care, the process of internal audit with due care, scope of work, audit evidence obtained is sufficient and appropriate for external auditor to form an opinion, the documentation on planning of internal auditor, and sample size selected by internal auditor.